Hi, welcome to the Money Tea. Today we'll be talking about what to do with your emergency fund. What should you do with your emergency fund? Should you invest it or keep it in the bank? Today we'll find out exactly what to do with your emergency fund. Many people will say you should keep it in your bank. Duh! But is your traditional bank the right place to keep your emergency fund? Well, let's see. Because of the COVID pandemic, the Federal Reserve has agreed to keep interest rates low until at least 2022. What exactly does this mean? Basically, if you keep your emergency fund in your traditional bank account, you will barely earn any interest on it. Why? Well, this is because if you're a saver, banks pay you to keep the money with them. So when the Federal Reserve decreases interest rates, banks also decrease interest rates, meaning that they pay you less money in interest. So if interest rates are low, does this mean that you should invest your emergency fund? Well, not really. This is because your emergency fund is ideally money that you'll need in the next 3 to 6 months, so you want to keep it somewhere where you can easily withdraw it. And with investing, you always want to keep your money invested for a long time, so no, an emergency fund is not ideal to be invested. So what does this mean for you? Well, there's another option. Think about opening an online savings account. On average, online savings accounts pay way more in interest than your traditional bank will pay you. The only difference is online savings accounts, as you can imagine, don't have a physical presence. Before, online savings accounts used to pay on average 2% interest, but because the Federal Reserve decreased interest rates, they've also decreased the interest rates that they pay. So if you keep your emergency fund in an online savings account, you'll be paid on average 0.8% interest a year. Isn't this basically nothing? Well, not really. Let's look at how much you will pay if you put your money in a traditional bank account versus putting it in an online savings account. So at the moment, traditional bank accounts offer you 0.06% interest. Now compare that, 0.8% interest versus 0.06% interest. So basically, this is how that will look like. Imagine you have $1,000 in your emergency fund and you're deciding where to put it. If you leave it in your traditional bank account, they'll pay you, remember, 0.06% interest. So after 1 year, the interest you earn on that $1,000 will be, do you know how much? 60 cents. You'll earn 60 cents if you keep your emergency fund in your traditional bank account. On the other hand, if you keep your emergency fund in an online savings account, do you know how much you will earn? Remember, online savings accounts are currently paying 0.8% interest a year. So after 1 year, that $1,000 will earn $8 in interest. Well, $8 is not that much, but it's certainly way more than 60 cents. At least you can get 3 coffees or a McDonald's meal. Or you could just keep that interest in the account and watch it grow. And what if you don't need your money in your emergency fund for at least a year? Well, then you should consider certificates of deposit. A certificate of deposit is basically a bank account with a fixed interest rate that is usually higher than what you will get on an online savings account or in your traditional bank account. The only difference is with a certificate of deposit, there's a fixed withdrawal period. So basically, if you get a certificate of deposit of 1 year, you can only withdraw the money 1 year on that date and not earlier than that. Another difference is that with an online savings account, you can deposit money as often as you like, but with a certificate of deposit, you can't add more money once you've bought one. So how long should you hold the certificate of deposit? You can hold it as short as a few days or up to 10 years. So are certificates of deposit safe? Absolutely. They're actually one of the safest savings instruments available for 2 reasons. One, because you get a fixed guaranteed interest rate after a certain period. What you signed up for is what you'll get. Another reason is that certificates of deposit are protected by the same federal insurance that protects all deposits products. It is called the FDIC and it insures up to $250,000 of your money. So in case your bank fails, your deposit will be protected. So where do you get a certificate of deposit? Virtually every bank or credit union offers at least one certificate of deposit. So you can start by asking your traditional bank if they offer certificates of deposit. Keep in mind that every bank has a minimum amount required to open a certificate of deposit. So yes, the first step is definitely to start your emergency fund, but then after that, make sure that you keep it in an online savings account or in a certificate of deposit because you're more likely to earn higher interest that way. And that, my friends, is the tea of the day. Until next time, cheers!